This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Mid. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on a Monday afternoon. I am Cesar Delgado. I am your host of today's program. I want to go to shout out the WITY 98.89 in Central Illinois and Danville, Illinois. They are a new affiliate in Central Illinois. We were listening to Dr. Seth Myers from the livestock markets. Then we were talking about the commodities markets with Tyler Shau from agmarkets.net. Now we were listening to from Dr. Seth Myers from the Department of Agriculture on the cattle markets.
You talk to some of the cow-calf folks, and yes, those feeders are worth a lot of money, but the decision is, do I take the cash now, or do I retain that heifer and hope that I'll make that money 2 years from now on a fed-out animal? And so I talked to a lot of cow-calf operators, and they're certainly hesitant to expand, maybe maintain some of the animals that they have. And yeah, we're in a contraction phase, and I'm happy to say my NAS colleagues have given me back my auto report for July. So we'll see if we turn.
We see the cattle markets with these prices. Seth Myers from the Department of Agriculture, he said that cow-calf producer, they're seeing the best prices forever.
The near-term record feeder prices has that effect of not wanting to hold those animals back because it's so there's so much money to be made right now. Do we have good forage conditions? Do they want to hold them? Will they be able to support that cow-calf pair? So I'll be really interested to see. The last January report suggested that maybe that cycle was slowing a little bit. We'll see if we get a turn in the July report. So I think this is a really important report that I'm really glad to have back.
Seth Myers, that the near-term feeder has been not wanting to be hold of those animals in the cattle markets for right now. Do you want to have more information about the cattle markets for right now with Seth Myers? Go to usda.ers.gov. Thanks to Mike Davis from the American Farm Bureau for this audio. I'm joining with Tyler Shau from agmarkets.net on the commodities markets, especially in the cattle. Tyler, how are things in North Dakota?
We're pretty soupy here. We've been every time I've talked to you, it seems like for quite a while, we've been telling how dry it's been. That changed on Wednesday. We got a soaker that came in, dropped over 4 to 5 inches, some places up to 6 inches in western North Dakota, and we just continue to get rain. We got another half inch over the weekend, and earlier this afternoon when I was in the house, it looked like we had another inch and a half already today. So we're making up for missed rain events. I would venture to guess in the last week we've received more rain than we got all the way from August to the 1st of May. So good change of pace, a little chilly, but getting a little moisture, hopefully get some grass and alfalfa growing and a good start to the crops in the ground. There is some concern. It is going to get pretty cold, chances of some freezing, and so might be looking at some really wet, cold plants that's just emerging out of the field. So we got a little bit of concern ahead of us here, but we are thankful for the rain.
How is the temperature up there?
Well, we're in the 40s here today. Kind of for high temperatures, it's about a record low high. That's a hard one to try to explain, but We're in the lower 40s and lows in the lower 30s. So that's going to stick around for the next 3 days while it continues to rain. So it'll be interesting. Tough on some young calves, tough on crops that are just coming out of the ground. But again, we beggars can't be choosers.
Yeah, we were hot on Friday.
It was hot here a week ago. A week ago we were 100, and today we're 40. So
Mm, mm, mm. Crazy. Tyler, what was your thoughts on the balance sheet with the world's supply and demand?
well, our thoughts. I mean, it was somewhat friendly to the soybean market. We saw uh, estimates for ending stocks come down both for old crop and then a sub 300 million bushel new crop estimate. So they're keeping demand pretty high on the soybeans. That's, we find that one interesting because it really leaves very little room for any type of a yield hiccup. And we're starting with a record yield of 52 and a half bushels per acre. So, if we don't have ideal weather, if we run into some roadblocks as we move throughout the year, that's going to be a sign that we're going to be short beans domestically. Some of that, I get a lot of customers seeing that. They hear talk about it, they call up and they want to be very bullish soybeans based on that. The caveat there is on the world side, we see incredibly large ending stocks of soybeans. So, our lack of production is going to be more than offset by increased production in South America. And so, the end result of that is as we continue to lower yields, or if we go and move yields lower as we move across the summer, you're going to see the export number come down, and you'll see that import number come up. So, I don't think it's anything right now to get too bullish about on soybeans. It's a friendly factor. You might say that there's a fuse. Now we just need some type of a match to push this bean market higher as we move forward.
How is the beans futures on today, especially on July beans?
July beans closed the day at 150 and three quarters, up about a quarter. We had a pretty good rally going through the week until last Wednesday, and then Thursday with the announcement on the EPA and the RVO announcement that we might see a delay in the announcement of what they were going to do as far as renewables goes. Kind of saw the wind sucked out of it. The good news is that July beans been kind of holding some recent support levels, 200-day moving average specifically at 1047. And it's been tough to really tank that thing down below 1050 and hold. So we're watching the bean market pretty closely. Want to make sure that 1050 to 1045 market holds to kind of feel good about where soybeans are at.
S.
It feels like planting progress should have advanced pretty steadily this last week. I had looked at the information a little bit ago. I'm trying to find it as we speak right now. The estimates came out as far as what everyone was thinking. We're probably going to be, we're moving along pretty good as far as planting pace goes. I don't see any reason why that would have slowed down in this last week for any reason like that. The estimates are going to come out or came out about 78% planted. That's a higher than last year's 70% and a 16% increase over last week's number. As far as spring wheat goes, the estimates coming in at 80%. Last year we were at 79. I'm a little torn there. I know we made really good progress early in the week last week. There's virtually been no progress made since then. And soybean planted, estimates are coming in at 64%. That's above last year's 52% and a pretty good increase over last week's 48%. So wouldn't be surprised with the weather that we saw in a lot of places. Iowa virtually had no rain. There was kind of a dome over it, just push rain north of it, push rain south of it. but was not able to catch any of it. So they should have made very good progress in that state over the week.
How is the wheat yield with the weather for right now?
Well, the wheat, the winter wheat, they just had the Kansas crop tour. Winter wheat yields were better than what the USDA was predicting and better than last year's wheat yields. So that's what's been pressuring this wheat market over the last several weeks. It just the weather in the Central Plains, the weather in the Eastern wheat belt has just been pretty good for that winter wheat crop. So there's really no concerns on yield. As far as spring wheat yields go, we're a long ways from really having a clue on that. Obviously these rains help and are somewhat positive. But it looks as of right now we're continuing to build ending stocks on wheat, and at least the winter wheat classes.
We are seeing highest cattle prices into the feeder cattle. Otherwise, what is your position on the puts?
We've been saying this for a long time. You just kind of start to feel like a broken record. If you're buying cattle, you should be hedging them somehow, whether that's buying puts, buying LRP. I had supper with some customers the other night, and they were asking, why is LRP so much more expensive than it has been in years past? And I just try to remind them, you're insuring a product that's much, much more valuable. If I go buy a new vehicle and I look at a, a, a little SUV, or I look at a four-door dually King Ranch Ford, uh, the insurance price or the insurance payment on that 300 or that 1-ton dually Ford is going to be much, much more expensive than my little SUV. So we're seeing the same thing in cattle prices. The result is higher costs in premium for options. But it's not going to scare me. I'm okay paying $10 for a put that's pushing $300 for your back month feeders. So we're all about it. Fat cattle's a little harder to get hedged just because of the disparity between the cash price where the board is. But I still think you need some type of protection. At any point, the other shoe could drop. We could see this market tank. Has been saying for well over 2 years now, what kills the cattle market's most likely going to be something completely unrelated to the cattle market.
How is the cash cattle side in the north and south?
Cash cattle has been strong. The north last week, as we left on Friday, there was reports of 229 and 230. That's just incredibly high prices. Dressed carcasses at 358. South reported cash at 219 to 220. So, it's just incredibly high that the South is pushing up there. Cash hasn't backed down on the feeder calf side. We've seen feeders soften a little bit, nothing, to where anyone's too concerned, but we've seen a little bit of break in that feeder calf market. And the cash prices are starting to come down just slightly.
I think that I want to buy a Ford King, but it's pretty expensive, by the way.
Yeah, not only is the insurance expensive, so is the truck, which same goes for cattle right now.
Do you have any final thoughts about the cattle markets for right now?
No, we saw a pretty significant reversal on last Wednesday. So far, though, these markets seem resilient, and we think that's just a function of futures want to break. Cash is just not agreeing with it. People are still wanting to buy beef. People are still wanting to buy cattle to put into feedlots, and packers are still having to chase these fat cattle down.
Where people can find you for your consulting services for their grain marketing?
Yeah, they can look us up agmarket.net, and there's a contact page. We got brokers located from North Dakota all the way down to Southern Illinois.
Thanks, Tyler.
You bet. Thank you, Cesar. Have a good week.
This is Tyler Shau from agmarkets.net on back roads of Illinois. Thanks to Tyler Shau from agmarkets.net. This been back roads of Illinois. I am Cesar Delgado. You have a good day.